Hello. So this is a mic test. I have just started the stream. Hello, guys. You can hear me. So this is a mic test. I have just started the stream. Would appreciate a response in the comment section. I'll wait for you guys to join in. Let me prepare some other stuff that we do before the webinar to note down the timings and everything for the timestamps and whatnot. So this is 12/12/22 today, and this will be our first webinar for the week and 11th webinar in the series of these trading opportunities webinars that I have been conducting for quite a few days now. And let me check YouTube stream and trading view for confirmations. Okay, looks like we are online here. Okay, and the stream seems to be running both on TradingView as well as YouTube. So if there is some confirmation from anybody, either on YouTube or on TradingView, just type it in the comment section that you can both hear and see. Let me see. Okay. Just give me a second. I'll confirm it. Okay, guys. So I have confirmation that the stream is working. Everything is good. So let's just start. So first of all, the quick disclaimer here on screen suggesting that all content presented here will be purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading and investing, then you yourselves will be liable for your profit, loss of profit. Thank you, Madhavji, for the confirmation there. Rest of the disclaimer stuff you can just read over here on screen. Those of you watching after the webinar is complete can just pause the screen and watch it, of course. And with that out of the way, let me give you a quick introduction. My name is Neerav Yadav, and I'm the admin owner of this website called 50eyes.com, where I present my market views and have been doing it for 7+ years. My area of expertise is Elliott Wave analysis, which is an advanced form of price action, which I have been using over the years for my trading analysis, as well as forecasting the market movements or the major market movements. So far, one of the major achievements that I have had for these years is that I have created or kept a track record of all the analysis that I have done over the years. So if you follow me along on this 50eyes.com/forecast accuracy page, you will find that all the analysis that I did in 2016 had an accuracy of 83.34%. 2017 had an accuracy of 87.5%, so on and so forth. You can see 84, 19, 84, and 2020 88.5, and 2021 is 82.22%. You can check all the instrument names, crude, gold, S&P, Nifty, etc. here, the date of the analysis, and the video, which was the recording of the analysis over here. And in this way, all these analyses have been done and concluded. So this is how we do things. And just to point out again, this accuracy is extremely high and unseen in the industry, at least to me so far, and I have had it consistently for 8+ years, which is a big achievement in itself, if I say so myself. So that's one of the main things. Secondly, I also have a YouTube channel where the stream is also going live, by the way, where I have uploaded multiple of these webinars and videos over the years. It's called 50 Eyes Market Analysis, as you can see on the screen, handle name at the rate of 50 Eyes. And I'm also the author of the book called Think with the Market, Secrets to Achieve 80% plus accuracy using Elliott Waves. It is available on Amazon Kindle platform, ebook platform, so instant purchase and instant delivery if you are interested in reading it. So those are the main things, the introduction part about my work. And of course, my name is Nirav Yadav, if I had not mentioned it earlier. So that's about it for the introduction. Let's now head over to the actual stuff, which is the webinar. So the webinar, what we generally do is we go over the charts of multiple different instruments, followed by commodities, crude oil, gold, and then indices, S&P 500 and Nifty 50, followed by Bitcoin. After every analysis, I will ask you guys if you have any doubts. You can, if you have any doubts, post them in the comment section. If not, we will then proceed to the next chart. So with our last webinar, let me just open quickly the last webinar so that we can use the reference. So here is on chart the screen, or one second. Okay, so let's begin. First chart we'll discuss is Euro USD, right? And Euro USD, last time when we discussed, we had the view that swing wise as well as intraday wise, we should only be looking for long setups. And because we are looking for long setups, we were considering this as our main count, WXYZ. So let me just quickly give you a quick outlook of what this analysis is. So if you follow me along on the right hand side of this screen in this orange box, WXYZ correction would look roughly like this. Right. So this leg is called a W. This is called Y, and this one is called a Z. And all three waves are joined together by a connecting wave called X and another connecting wave called X. So that's what you call a WXYZ correction. And on the actual chart, I have actually already labeled it. So, but for the sake of simplicity, let me remove that and write it like this. Right. So in this particular scenario, we are assuming that the X wave is either complete or it is continuing. Even if it's complete or even if it's continuing, we expect the market to take out the high of around 1.0559. Basically this last high. So you figure out whatever the value is on your own charts, right? So because that is what we think of this market, so that leads us to believe that either the wave X is already complete here or it's continuing sideways, right? So long story short, it is a swing perspective. By a swing perspective, it is a long setup. And intraday wise also, if you go on a shorter time frame analysis, look for longs on this market or in this counter. That's basically my view on Euro USD. Still the same as in the last analysis. Nothing really seems to have changed. Swing wise longs, and the range for wave X, if it continues, will be within this box range, this orange box which I just drew. And I particularly do not think it will go in the lower half of this back zone. So this is the area in which it can propagate sideways. It still has to go sideways before taking out the most recent high 1.05918, roughly speaking. So that's our quick take on Euro USD. If you have any doubts, you can post them in the comment section. I'll just check the comments now. So there's a question from Myler Bustamante. You're trading Forex? Yes, of course, I'm trading Forex. If you had joined webinar number 9, there were some trades I fired live. 2 trades actually. You can just check the webinar number 9. It's in the live trading section. EURCAD. Okay, so if there are any doubts, I'll just wait for a few more seconds before moving to the next chart, which will be the chart of EURCAD. Okay, Madhavji, thank you for the confirmation. Also for the audience on YouTube, if you guys would participate a little bit more, that would be nice. But anywho's, moving on. EURCAD, last webinar we updated the counts, or yeah, I think last webinar, number 9, I think. That's when we updated the count to this WXY progression. And long story short here, we expect that this market is in currently zigzag formation from this current price action level. And we are expecting that once this market takes out this channel line to the downside, let me readjust this. So basically, once this market takes out this green channel line to the downside, only then we will be interested in selling this market short. Until it does that, there are no shorting that we are looking for in this market, at least as of now. And basically, that's the view for that was the view in the last as well as last webinar. So nothing to add on EURCAD. We wait silently for the completion of this move to the upside. Once it's complete, wait for the channel break. So if there's any doubt on this particular chart, then just type it in the comment section. So Chanakyan is asking, can't you analyze Bitcoin? As I mentioned at the beginning of the webinar, we will analyze Bitcoin. That's the last chart we look at. So you can wait till the end of the webinar for BTC. So that was my quick take on EURCAD. Right, next chart will be of USDJPY. So let me just quickly load that up on the screen. USDJPY, I think this is the one we are following. Okay, this is the one. Okay, so USDJPY has pretty much been following whatever we are saying since the last few webinars. Just to reiterate, it is within this same, I mean, basically it is still following the same analysis. So what we have here on screen from the point of reference of 133.625, date 2nd of Friday, December 2022, we have what seems to be a leading diagonal. Thus far, it seems to be holding good. And after the leading diagonal, we seem to be having corrective structure to the downside. So basically, a corrective structure to the downside basically means ABC kind of correction in this particular case. And one second. Yep. So it is an ABC kind of correction which has ended itself over here. So zigzag kind of correction. And if we draw the parallel channels, so you can see this orange parallel channel is already breached to the upside, right? So the minimum thing that market would do, or we expect it to do after leading diagonal, it will give a 3-wave correction. In this particular case, it has already given a 3-wave correction. So that means in swing perspective, we are looking for longs on this counter, right? Swing perspective longs, why I'm saying swing perspective longs and not immediate longs is that sometimes these corrections can become a bit more complex than this simple 3-wave movement to the downside. And that is the reason why, technically speaking, we should have a stop loss lower than 134.21 on over here. Technically, if you want to be really precise, it should be at the last low, but generally it should not go that much deep, generally speaking. So that's why I'm saying it should be around 134.20 something, and we should be looking for longs. Another way to play this counter, or the way I would be looking to play this counter, would be to take some longs at the break of the high of 137.670. As you can see, I've already placed an alert over here, right? So that's the simplistic take over here. Wait for longs above the 137.60 level. And alternate view would be to add partial longs here. Like let's say 1/3 of the position we can add over here and 1/3 at the break of the high, or 2/3 of the break of the high. So that's the way I will be looking to play USDJPY. So it's following our analysis pretty well. Definitely keep it in your watch list, and it should be giving us some good trades. That's my opinion on it. I'll just wait for confirmation. If you guys understood, just please type in understood or clear before we move to the next chart of EURJPY. Which is performing precisely as we thought it should. Okay, so let's quickly check the chart of EURJPY. So as you can see over here on screen, the EURJPY chart, we have our point of reference at this level. Price is around 140.786 and date is around 2nd December 2022. From here on, what we have is a or wave 1 up and the B or wave 2 down. So let me check one more thing quickly here, very quickly. Okay, so one thing here is that we sort of had the analysis very similar to USDJPY on EURJPY as well, even in the last 2-3 webinars, as I have pointed out multiple times. On this counter also, we were looking for long setups. Okay, and as you can see, while USDJPY has not broken above the last swing high, Euro has gone higher than the swing high. So currently there is still swing long perspective here. The idea is that either we have completed the wave B or 2 over here, or it's still continuing. So in Elliott wave terminologies, I'll just quickly explain that wave A, I'll just simplify it by just typing B. So wave A is a 5-wave progression in the upward direction, which is followed by a correction, which is called a B. And then there is a 5-wave move again in the upward direction called a C. So in this case, this is your 5-wave move in the upward direction, which is, as we just said, is called an A, right? And the B wave is looks like it's not complete here because the leg down after this move started for the wave B within the wave B. Sorry, we move started for wave C within this correction seems to be a little bit smaller to me, right? So considering everything here, I think it's still a long, but we need to wait for some clarity on wave B. If we are interested in getting aggressively long here, then the ideal strategy will be to trade only 1/3 of the position here and add 2/3 or let's say 1/3 over here near the low. So if this is how the market moves, then 1/3 at current levels, 1/3 at the low, and then 1/3 once it breaks the high. So that's my take on EURJPY. Again, it's a swing long. I just outlined the whole trading opportunities here as well as my view of how I would take the position sizing here. Well, personally, I will wait for it to give some pullback because it looks that way. But who knows? It is the analysis, and I have pointed out some other probabilities. So if price action becomes more clear, maybe I have to get long a little bit earlier than what I just said. But that's my take on EURJPY for now. We'll wait for a few more moments. If there is any doubts, you can type them in the comment section. If not, then just type in clear quickly before we move on to the next chart of crude oil. Again, guys, if you are there in the comments section, kindly use it. This is a webinar and I would like to see a little bit more participation. Harshit is saying, okay, in that case, let's start the chart of crude oil. So this is a chart of crude oil that we are following. Now, right here on screen, you can see, let me just remove the past counts and stuff. So if you guys were following me in the last webinar, you guys remember that my view was that the crude oil market should go to the low of 70 level, right? And basically, I have marked out the targets with these two lines. I mean, you can see these purple lines, right? So this was the target zone in the last webinar, and I also clarified with very much emphasis last time that although this market is a sell short, there is a probability that it might just jump up before the fall, right? So because of that, it was only a swing short. That is, you could take only partial shorts and you have to leave the remaining position for the upcoming events because we didn't know how they would proceed. Anywho, so the last webinar was on Friday. And just to give you a quick heads up, we do these webinars Monday, Wednesday, and Friday at 2 p.m. GMT every week. So make sure you join in live to catch the opportunities. Sometimes I mention a trade and it is done by the time the webinar ends or 1 or 2 hours after the webinar ends. So that's the nature of the markets. Getting back to the point, last webinar was, was conducted on 9th December. So on 9th December, let's quickly check where the market was on 9th December. So somewhere here, the market was on 9th December when we conducted the webinar, right? Somewhere here. So it went down, it touched the target of 70-ish levels. So it has done the bare minimum thing that we were expecting from this market, right? So because it has done the bare minimum thing, the analysis has played out, right? The target is achieved. But as I said, I personally was not interested in this small movement for this big of a stop loss. So I was not in this trade, right? However, let's see what this market is doing right now. So this is our point of reference on this chart, and we seem to be having a possible flat correction. So the flat correction outlook still holds. It looks like I will have to just explain quickly on the rough hand side. So a flat correction in this particular case, which looks to be like a running flat maybe, is a formation which looks like this. 3 waves to the upside and 3 legs to the downside, and then followed by 5 waves up. So in this case, we seem to have completed the A here and the B looks to be completed here. So that means we can see a run up for 5 waves, right? And the target, I would expect the market to go around somewhere 78.80. 78.80 level is what I expect the market to go around. So that's one take on this, that the C leg is still remaining as per our view of the running flat structure, right? And the second take would be that wave Z is complete here. That would be as, by the way, let me just quickly reiterate. So this is our first take, hypothesis 1, which is suggesting that the wave B may have completed over here, right? And we may see an upward movement. So that will be a counter trend up move for wave C. Now let's head on to our second hypothesis, or hypothesis 2, which is suggesting that B was actually complete here, C is actually complete here, and that means this leg down could still be continuing for the, because this C wave, once it completes itself, we can see a bigger leg down. So that basically means this leg down can still be continuing. So downward movement is possible. Hence, the outcome of this analysis comes out that for longs, we will have to wait for some sort of clear distinction to go longs, like a clear setup. In my case, this is, by the way, not an alert for going long. This is just an alert for me to reanalyze the market. So I'll be looking at, takes out the level of 75.297 on the upside. And for sell-off, I'll just have to check it on a lower time frame. It's an intraday sell-off, so I won't necessarily comment right away what we have to do. But yes, sell-off is the more clear direction we have on this chart. So that's my quick take on crude oil, right? Longs, wait for clear sign. Sell off, if you are already short, keep trailing your stops. And secondly, wait for the market to go near the last lows around 70.657 to re-enter or look for shorts again. So that's it for crude oil. Hello. So guys, I think I got disconnected there for a bit. Can you guys check and confirm if the stream is still live? I have just reconnected the system. Just actually changed the Wi-Fi connection. Anybody in the comments? Can anybody confirm here? Let me see. Microphone is working. The live stream. At least on my system, it is going. Yep. So if anybody can confirm in the comment sections, that would be nice. That we have come back or what. I'll wait for a few moments here and myself check on an incognito tab. Okay, we seem to have reconnected here. Let me just quickly type that in the comments as well. Okay, thank you, Madhavji, for the confirmation. So that was our take on crude oil. Got nothing to add here, right? I'll just wait a few more moments before we move on to the next chart, which will be the chart of gold, and see how gold is performing. If you guys are, by the way, clear, you can just type in clear, or doubts, you can just post them in the comment section. I'll just take them. Looks like everybody is able to understand what we are talking about here. So let's now move over to the chart of gold. So on this chart of gold, as you can see, last time when we did the analysis, we had the view that from this point of reference, which is around the level of 1614.47, we seem to have a leg in the other direction, right? Which we were calling as an possible A wave. Following by the A wave, we had a leg which was called a B wave. And that basically comes out that we will have a C wave up, if you couldn't guess, or as you may have guessed. Anyways, so that's our take on gold spot. Right now, the current progression could be progressing as a possible diagonal structure, in which case this market will briefly take out the last high of 1810 something. So we expect 1810 plus as per that analysis. Second analysis is suggesting that this C wave is continuing in a nested way. So this is the big wave 1 up, and wave 2 may still be continuing. So in that case, we will not see the high before we take out this low first. So that's our second take. It is still suggesting 1810 plus, that is much higher than the 1810 level. But in this case, it will go down before taking out the high. So in conclusion, I will be looking for longs once this market is nearing the last highs here. Alternatively, if the market does not go near the last highs, but instead takes out my downside trigger, as you can see, I have a trigger placed around 1780. Then I will strategize to take. Okay, I placed the wrong alert. 1 second. Then I'll strategize to take some partial longs. Not exactly at the trigger, but I will reanalyze the market after the trigger goes off. So our analysis on gold remains the same, and it has been playing out pretty much as expected or as suggested. So hyper 1 suggesting of a diagonal, and the leg 1810 plus and hypo 2 is suggesting downward movement followed by upward movement, and much higher than 1810 plus. So I will just say plus plus, because it's a wave 3 in that case, and wave 3 generally will go and give a much higher target. So that's my quick take on gold here. That's about it. Nothing new to add. Still following the last analysis, which is good. We'll wait for a few moments here to see some comments, or what do you call, doubts if you have any. And yeah, guys, one more thing. I see a lot of you guys are here, but only zero, basically no, what do you call, hits on the rocket button on TradingView. So if you guys are enjoying what we are talking about here, finding value in it, then kindly hit the rocket button on TradingView and the like button on YouTube. Helps the TradingView algorithm and other people to figure out good quality analysis that way. And also it takes a lot of time and effort to do these webinars, so it's best we increase our reach and get more people joined into these. So kindly hit the rocket button, as I just said, while I load up the next chart, which will be the chart of S&P 500. So here we have it on screen, the chart of S&P 500. And in this chart, as we said in the last webinar as well, there was a bit of what do you call, unclearness, or basically we were just waiting for this chart to make some more clear price action so that we can interpret it. Not going into too much detail again, I'll just quickly go over with the bigger time frame view first. So from this point of reference, which is around the price level of 48.27, what we seem to be having is a correction in the downward direction. The correction is in the form of a diagonal, which we were calling a wave A. My bias after that point has been that this market has, 1 second. Yeah, so my bias after that has been that this market has continued to form a correction as the wave B. Right? And by that, what I mean is that it may be continuing like this, which will be a triangle formation. And then it should be followed by another leg down. So that will be what you call a down, B up, and C down formation. Now the thing is that I've avoided commenting too much on this shorter time frame count is because wave B generally can become quite complex, and in this particular case, any movement within this box range will be just a correction, right? So maybe it will complete here, maybe somewhere in the middle here, and then go down. So we don't really know. So basically the outlook then becomes that it's a options traders market. If you can create spreads, if you know how to do all that stuff, then we can trade accordingly based on this range and based on this analysis. So I have just given you again a swing perspective from a longer time frame analysis of 4-hour chart, that we expect the wave to be continuing, and we expect once the wave is finished that one more down low movement should pursue, whatever is the exact thing to say here. So that's our take on S&P. I'm just going to discuss the swing perspective here because that's the one which is looking most clear to us. Again, I can dive into a lower time frame chart, but it's best to avoid it at this point in time. I'll wait for quick questions if you guys have any. Yes, Madhavji, next chart will be of Nifty 50. Since I seem to be having no doubts on this chart, let's quickly load up the chart of Nifty. Okay, so here on screen we have it, the chart of Nifty. So as you guys remember in the last webinar when we were discussing this chart, our view was that I mentioned very clearly that it is possible that the wave C may have completed over here, right? But as I said, it did not have any confirmation, like there was no clarity if it's complete or if it's not. So I said I will be avoiding any longs for the moment. And as you can see, this is exactly how things played out. The market opened gap down and moved lower. So now at this point, it becomes more likely that the C is complete. And at this point, it is, for me, in my personal opinion, it is okay to trade longs and take some risks on the upside. So in my personal opinion, the A, B, C can be considered as complete. There are other possibilities that are appearing right now, but it will be okay to trade longs for the short term time being. Based on that, if the C is complete here, we can look at this leg up as a 1 or A and the correction as a B wave. So I personally think that Tuesday or the next session can see some substantial upward movement for the C or 3 wave, whichever that is, right? Of course, there's the possibility that B becomes more complex, goes sideways within this box range and whatnot. But as I said, the upside possibility is worth taking risk on the Nifty counter, as per my understanding. And to avoid the chances of possible wave B continuation, we can always what do you call, look for trading either futures or next month contracts if you are trading options. So Nifty, in my opinion, is suggesting one more up leg minimum, right? And if things don't go that way, we will obviously have to check that in the next session itself, because obviously the market is closed right now. That's my quick take on Nifty 50. Rather simple. And if you are interested in looking for targets, then simply we will take the last leg up as our guidance, and we'll be looking for targets 18,550 to 18,600 in the upward direction. So that's my take on Nifty. Next chart will be of BTC. If you have any doubts about this analysis, you can post them in the comments section. Looks like we are clear over here. So let's move ahead with the chart of BTC. On screen, you can see BTC. For a very long time, we have had this analysis where I've been suggesting that we seem to be having a wave A over here and then a wave B continuing as a zigzag. I have sometimes counted it as more of a flat correction and sometimes more of a complex, but more or less the analysis remains the same on both phases. So I'll just go over with a simple one. So as I may have mentioned in the past webinars again, so we think that we may be seeing a wave A up here and the B down here and C up here for the completion of this wave B before a new leg down continues. Second analysis that we have on Bitcoin is that the market is just going to go down from the current level much lower than what anybody would have imagined. Basically a big bear move, right? So big bear move is just nothing to analyze there. It's a big bear move, so it will be big. Second possibility, which is interesting right now, is that this one, the ABC flat correction here, the smaller degree A, smaller degree B, and smaller degree C, because this suggests one more up leg before the fall, and even in that case, this one more leg up before the fall. If that happens, then the fall also will not be substantially big. Generally, we measure the first leg down and project it for the next leg down. Although C itself still will be big, but not as big as the bear case scenario. Just keep in mind, I'm using the logarithmic chart here. So the movement from 64,545 500 something to 28,000 over here itself is a pretty big fall. If I remove the log, maybe you can even see. I think you can just check the difference. Now once I turn the log on again, it looks more like a smaller move compared to this leg down. Anywho's, coming back to the point here, the analysis we are following so far suggests that this price range, which I have just marked with this orange box, which is coming around 15,300 to 14,300, roughly speaking, is the region where this market can take support. Now, following forward with that analysis, if the market takes support in this region and then takes out this high, that will be a long trigger. So that's our take on BTC. The only bullish count we are looking for is this right now. And I've already marked the levels for the possible reversal we are expecting on this counter if this count is followed. With that, we have discussed all the charts that we generally discuss: EURUSD, EURCAD, USDJPY, EURJPY, crude oil, gold, S&P's 500, Nifty 50, and Bitcoin. So if you guys have any doubts, you can just post them in the comment section on any of these charts. If not, I would like to request you guys to kindly hit the like button on YouTube, hit the rocket button on TradingView so that other people may find it and our work does not go unnoticed. And lastly, obviously, please share it with at least 3 of your groups, WhatsApp groups, Telegram groups, whatever you have, or 3 of your friends or people you know who are into trading, so that they can also benefit from this knowledge and this work that we are putting in. Lastly, I would like to just quickly take a moment and show you again about my work. You can just visit my website 50eyes.com and you can go ahead and check out the courses that I have, which are the Elliott Wave video course, the personal training classes called Training Program LT. You can request details for it. You can also go over and check links for my book, which is an ebook on Amazon's Kindle platform. It was published in this year itself. It's called Think with the Market: Secrets to Achieve 80% plus Accuracy Using Elliott Waves. And that would be all from me about my services and my work. I hope to see you guys in the next webinar. That's it for now. Bye.